today. Been a couple of days off, but there's been I guess a bit of a sell-off on the US dollar. Mainly what we're looking at is the US bonds post FOMC, buy the rumour, sell the facts. So we're seeing the US dollar weaken and it's coming to a bit of a support level. So that's the US bonds, and we're seeing that across the board on all the bonds, where stocks are quite boring, but US dollar is coming back to a bit of a resistance level, and we can see that on across the euro here and on the US dollar index. But I suspect what we're going to see is more of the US dollar coming into that zone that we're looking to buy in. So as the bonds weaken, and Jerome Powell in his testimony this week said that there is a possibility of a recession, which sort of put a hawkish tint into the market, i.e. that rates will be coming down quickly after getting inflation under control. That's the theory. And so yeah, there's a bit of a sell-off on the US bond market. Buying the bonds, and the yields are coming off, and that's weakening the US dollar somewhat. So I suspect that's going to kind of play out for the rest of the day. There's been no major news, and as we go and have a look at the stocks, we can see that there's no sort of kind of boring in stocks, but again, it's also at a major resistance levels of all these previous lows that we saw in May. US stocks, so that's the S&P 500 up here and the NASDAQ. Australian market's well away from any sort of resistance, which is around the 6,800 level. And we've got the UK trying to push through that previous low in May. The Nikkei's made a double bottom, so we're sort of looking at a bit of a range here on the Nikkei. And the DAX also failing off that support level. So the picture still does not look good for stocks. With rising interest rates followed by a recession, I guess the idea of cheap money that's going to be available during a recession, if people can look through the fact that corporate earnings are not going to be performing and therefore the stock valuations will be cheap, that might be a reason to buy stocks. But otherwise, the stock markets should continue to weaken. Opportunities going forward. Sorry about that. Look, I think fading stocks. If we see any sort of resistance, the stocks are closing unchanged. There's no major selling seen yet, except maybe on the German DAX. If you see a big seller bar, here the FTSE might be a good sell opportunity. That's in the indices, across the majors. Not seeing anything, to be honest with you. As I said, I think the US dollar is still going to be a weaker one today, and for the rest of this week, the yen did break through 135 level, or 135.40. Finally broke through that a couple of days ago. Selling yen is still a good opportunity, but in currencies, I don't really see any direction other than a bit of US dollar weakness. Looking at the Aussie dollar, it's weaker than its counterparts, and that's mostly thanks to the commodities. We're seeing copper getting smashed across here. Oil and gas are a little bit weaker, and when we go and have a look at iron ore, one of our major exports, it's also weaker too. So the the Aussie dollar is a little weaker against its peers. But other than that, I think it's a wait and see if you're looking for long-term views. But the shorter-term plays still, since the FOMC and prior to the FOMC, I've been advising, looking at shorter-term plays rather than long-term, because the volatility and direction is just a little bit obscured at the moment, and until we get that sort of turnaround in the US dollar over here that we've been waiting for, and then we should get some good direction. That's it for the day, guys. I'll see you tomorrow.